A bit of both, because, of course, right now you were just mentioning the U.S. treasuries, and they are offering real yields in 10-year maturities, for example, north of 2%. That is comparing to so much lower real yields elsewhere. That's an opportunity. But at the same time, it is safety as well. And that is the first thing to say, together with everything that is linked to the rates market. Corporate bonds in the U.S. are giving north of 5% for very decent maturities. So this, for investors, I think is a very good basis to build portfolios on.
That would be something that would be hard to argue with in normal cyclical times. But what the question is being raised now by many people who are looking at the bond market is, are we structurally going to be in a different environment going forward, owning US assets, owning US paper? Because the oscillation, we think, will outlast the midterms. We think will outlast potentially just one more term of Donald Trump. And who knows how long this is going to last. So is there structurally a question we need to ask about, and I say this very carefully because I'm not trying to call the end of Treasury ownership or anything like that, but a lot of people are now questioning if the US is prepared to divorce itself from the world to a certain degree, should investors be more cautious on US assets?
So just to stay with treasuries, and we'll move right away to equities. But in US treasuries, we have to realize that since the QE program, most of treasuries are held by domestic investors. And so for them, the US treasury remains what it is. It is the risk-free asset in the US. And as far as foreign ownership of US treasuries is concerned, we have to understand that the foreign owners have continued to buy US treasuries. For example, in the latest auctions in longer maturities, there was a very good absorption by foreign investors. They're looking at the yields, and they're also thinking to them, what do I have as better opportunity right now? So I think that on the treasury market, we can be relatively comfortable in terms of what it represents. Now, coming to equities, I think there has been a very healthy reconnection of US assets, US equities with fundamentals. Think about it. At the end of last year, valuations on US equities were frankly stretched. Everybody was looking at this reality. And now we are much more in line with historical averages. So from here, really what is going to happen on equity flows in and out of US equities is what usually happens. What is your earnings outlook, and how much are you paying for it? So I think that this reconnection with fundamentals is a very healthy starting point. And to your previous question, is this now an opportunity? Yeah, for a whole range of stocks that were really too pricey beforehand and that are showing resilience on earnings, it's an opportunity.